It's the PMI season, as it is all month, rather all week this week, and it's probably one of the most important figures apart from the unemployment data from the United States. Everybody looks at PMI. We've got the Chinese PMI coming in only just above 50, to be quite honest. The US exactly the same, and in the Eurozone, the PMI is mired below 50. What about South Africa? Well, listen to this. After declining to 49.3 in March, the seasonally adjusted Kagiso PMI increased by 1.2 points to 50.5 in April. In the studio with me is Abdul Davids from Kagiso Asset Management. Abdul, it's getting quite volatile, isn't it? Yes. Choppy around that sort of 50 pivotal point. What happened last month?
Well, I think last month we said we could expect another contraction. Lo and behold, it's above 50. And I think what happened is we saw some demand pickup coming through, especially if you look at the new sales orders, marginal recovery in that one, but more the business activity and activity levels strengthening and bouncing back to the February levels, so 52.5, as you've mentioned. And I think that those two are clearly the biggest weighted components of the PMI. And that drove the PMI back above the 50 level as well.
Business activity, I mean, it's obviously a good sign if it bounces up. If any of the components bounces up, that's very good. Why particularly did it happen last month for business activity?
Well, we can only speculate. Clearly, from the purchasing managers that participate in the survey, it looks like quite a few of them reported widespread sort of recovery in activity levels. Bearing in mind, January was a particularly weak period, and especially on the mining side, we know the issues that came forth from the fourth quarter of last year continued into January. So some of that could have been a delayed sort of recovery that has come through now in April as well.
Okay, new sales orders. That's always quite a good thing, I think, because if people are enthusiastic and optimistic about the future, then they order new stuff and stick it in their warehouse. So the fact that this has bounced back is quite good.
It is. It's only a 1.7 point index move, but nevertheless it is a good sign, as you rightly say. And we hope that it is a sign of things to come. Clearly what we have seen is that has put strain on suppliers' performance. So suppliers' performance index has actually deteriorated a bit. But again, that's also potentially a good sign, because it means that the recovery in the activity levels coupled with the new sales orders will force manufacturers to obviously tool up and raise the expectations, raise the activity levels further in May, and hopefully we'll see another recovery in the May numbers as well.
Is there a base effect here though? Because we've had some fairly dodgy numbers over the few months that we've been reporting together, Abdul, and would it be the case that people are saying, well, it can't get any worse, so therefore we're going to order stuff in at these particular levels for whatever reason, with inflation being below 6%. Maybe it's an anticipation of inflation going up, so that's why they're restocking at these prices. I mean, I just can't sort of speculate, but maybe you could help us.
Yes, very much so. I think what we have seen is that activity levels from where it came from was fairly benign and fairly muted. So any recovery, and you really just need 10% of the respondents to show an increase for that to have an effect on the overall index as well. And that could have contributed to the recovery that we've seen.
From a social point of view, the worst thing I've seen in this Kagiso PMI is the employment index continuing down to 42.1, its lowest level since July 2011. That's disastrous.
That is disastrous. There's a combination of factors. Clearly, as we've discussed all along, there's oversupply in the manufacturing sector. And unfortunately, the type of supply that we're looking for, the skilled, highly educated labor, artisans, etc., that is not forthcoming. However, what we're also cognizant of is that May, June, July, those are your wage negotiation periods. And typically manufacturers hold off on new hires, because clearly you're going to a wage negotiation period. You have to potentially backdate wage increases, etc. So it's more wait and see approach that they take on that side. And hopefully once, if it does materialize, that it is a smooth transition in terms of the new wage settlements, hopefully that will contribute to a recovery in the wage sector as well.
Unless, of course, the wage negotiation season becomes a little bit fractious and people go on strike, in which case the PMI and the whole economy will suffer.
Unfortunately. So the next 2 months are quite critical with regards to that.
What about prices? Because this interests me strangely, because overseas everyone talks about with quantitative easing, inflation is going to pick up worldwide, but we consistently see inflation either staying at benign levels or actually even falling with the threat of deflation. In South Africa we're still below 6%, and that's despite the Rand doing what it's done in the last 6 months or so. There seems to be no pricing coming into the market at the moment. What did the PMI show us?
Well, we saw a reduction in the prices index, and that is largely, we think, on the back of lower dollar oil prices. So we've seen dollar oil prices come down, and bearing in mind, obviously, the rand has actually been quite flat over this period. The impact of that we saw yesterday, for example, petrol prices coming down by about 73 cents, I think, in the Western Cape, for example. But clearly that has had a major impact in terms of the prices index, because typically your energy cost is a big component of total manufacturing costs as well. But as you rightly said, the whole commodity basket that we've seen, and we've seen commodity prices, both precious and base metals, being fairly weak as well. And that's also another key input into the manufacturing sector as well. So on the other hand, obviously on the food side, we have started to see some food prices being impacted by the weaker rand. But clearly from a manufacturing point of view, commodity prices and oil prices are what's driving the price index.
Looking forward, I would always ask you this question now,
yes.
But you have to give us an opinion. You've always been fairly bearish. In fact,
yes.
for the last 6 months, you've been
yes.
fairly bearish. You've been right, maybe wrong this month.
Yes.
But as I said in my introduction, it's sort of this 50 level is a pivotal point
yes.
for South Africa. We need it to be 55 to 60, don't we,
That's
for
right,
it
yes.
to make any dent in the
yes.
economic malaise that we're suffering. What do you
That's
think?
Right. If I look purely at the numbers, leading indicators looking positive. It's back over 1.1. Expected business conditions in 6 months is also picked up. So purely on the numbers, I'd probably say a marginal increase from the current sort of April reading. But that is obviously the big proviso is that what is happening in the global context. We've seen, as you've rightly said in the introduction, weaker European PMIs. Even the Chinese PMI is slightly weaker and slightly below expectations as well. So in the context of a global sort of situation where if we see a normalization or a stabilization of global PMIs, I'm willing to say that we should see a marginal increase. But clearly it's contingent on that sort of scenario.